Hey traders and investors, it is Thursday, July 17th. Taking a look at the charts, equities are a little bit mixed. We have the Nasdaq slightly positive while the Russell is down 0.4%. I got the S&P 500 pulled up here. Overall, the market is just consolidating and digesting. It is actually putting in a short-term cycle low. We've got actually a few things starting to play out here. So more or less, this is a potential bull flag pause. The market is trying to figure out if it's going to have another push higher, which the trend is up and it is pointing to higher pricing. And of course, I think we could see the S&P 500 continue to run up. Now, when we dive into the chart analysis, I'm just going to go the SPY just because that's what some of my trading indicators are based around. If we take a look at the SPY, we can see here we've got on the daily chart, we actually had a short-term cycle low. And this short-term cycle low is what happened in the last two sessions. We saw the market sell off. It came back down. This is after a pause for about a week. And that is usually a short-term oversold kind of dip. So based on a short-term cycle, you can see we've had some other cycle lows. If I was to just throw some lines on here from these lime greens, we had this other cycle low through here. We have another one-day cycle low over here. You can see how it kind of stands out, these pauses in the market, these pauses on the chart. And that's kind of where we are as of yesterday. The market flushed down, started to rebound with a short-term low. Now, if we look at the futures chart, I'll just go back to the S&P 500. We actually have a little bit of an oversold level here on the S&P 500. This lime green saying, hey, it's a little bit oversold. We also did see some panic selling right over there. So we saw panic selling drive in here. Then we got oversold. It had a flush and sell off, a flush down. So people panicking out. And then, of course, the market typically, when it gets oversold and you have a short-term oversold panic wave, usually the market quickly rebounds. These are usually emotional kind of swings, or kind of a washout low. And so we saw a bit of a bounce there. So today, again, the market is digesting, trying to figure out which way it wants to go. Where is money flowing today? Well, it's mixed with stocks. We are seeing money actually move out of bonds a little bit. Again, bonds are moving down. We talked about this big bear flag into the 150-day, up into a significant kind of resistance area, a very significant pivot zone through here and pivot highs and through the middle of noise. It has reversed down. And if we just look at this chart, we did a little Fibonacci extension on this last week saying, hey, if it's based on this drop and this rebound to this high, we should see it move down somewhere around the 110 level. Now that this is futures, let's actually go to TLT, which is kind of what most people would trade. If we go from the high down to the low and up to this high, you can see here. Let me just move this. Where's that line? Let me just move this over. So you can see here yesterday, we've seen more or less the market flush down pretty much to that 100% measured move, close enough to say that that has been reached. But overall, it's still the overall trend is down. And I wouldn't be surprised if this continues to break down and go lower. I talked about, I think it was last week, bonds pointing to much lower pricing and how the yields are pointing to higher yields. And of course, if yields go up, which they have been going, bonds are going to go down. And the big picture of yields, the very big picture of yields is super bullish. It is still pointing to some crazy high yields. Whether it happens or not, and whatever, everybody's got their opinions. People seem to be very strong on interest rate opinions, but the charts don't lie. The charts are pointing to higher pricing, and if they go higher, bonds are going lower, and that's just kind of where we're at this point. Higher yields will no doubt crush businesses, crush the United States, the debt, all of that stuff. But just because it could do that doesn't mean it's not going to do that. As we saw with oil can go negative. Nobody thought it could, and a lot of people lost their shirts. And you just have to realize it's not about what you think and feel. It's about what the charts are doing and following the money flow. And that is kind of where we're at. So let's take a look over at gold. Gold down a little bit this morning. I did not cover gold, silver, or miners yesterday in the report. And got a bunch of people wondering, why didn't I cover it? Well, sometimes I don't cover everything. And we've talked about gold 1 billion times. And gold is in the same consolidation. It has been going sideways for 2 weeks. If I don't bring something up, it's generally because nothing has changed. So you don't need to get all panicky and worry about me not covering it. Usually I try to cover stuff that actually has some interest and that's pending and or moving. Not always. I sometimes miss some big moves in the market in a morning video if I didn't quite catch it. But again, something that's been trading sideways for months and really has no movement isn't really worth covering. Whatever I said yesterday or the day before is the same thing that I would repeat. So gold consolidating in a bullish chart pattern, still pointing to higher pricing. If we do have chaos in the equities market and some bad news, we'll probably see this shoot up, and it's primed and ready at any point to do that.